Hello and welcome to this technical analysis webinar. My name is Kim Cramer Larsson. I'm a technical analyst and responsible for all charge packages we have on Saxo trading platforms. During this webinar, I will go through some of the major indices, some of the biggest FX pairs, some commodities. I plan to try to keep this no longer than 30-40 minutes. And let's see if there's time at the end for you guys also to ask questions during the presentation, but also at the end. First of all, I have to say that, or have to stress, this is not any kind of advice. This webinar is for educational purposes only, and here's a disclaimer that I'm going to show you. Nothing in here that I'm talking about is any kind of advice or suggestions or whatever you should do. However, if you afterwards decides to act on some of the stuff we are discussing, that is up to yourself. It's your own risk and it's your own money. Again, there's no advice. This is entirely educational. Man, sorry about this for a moment. Sometimes I'm struggling a little bit with this. Okay, here we are. Sorry about this. Oops. I did it again. Okay. I forget it from time to time. All right, let's get to it. Let's start with the major indices, S&P 500. Let's start on the daily charts. Quite interestingly, 2 days ago, on the back of the tax reform that was approved in the US, market opened higher, creating this very bearish candle it looks like a top and reversal pattern. So interesting is that it might also follow through today. It did yesterday. We have some divergence on the RSI down here. You can see the tops, the peaks here on the RSI is falling. They are falling, all of them, and but the market has been going up. That is what we call a divergence in the market, or an imbalance in the market, where market movements are not being confirmed by the technical indicators, and that is a little bit of a worry, to be honest. So a top candle here, very bearish candle. So seems like we could face a little bit of a correction. I don't believe it's going to be that much to begin with. What we don't want to see, S&P 500 is drop below 25.57. If we get a break below that, then we are in a bearish trend. But a little bit of a correction, maybe down to around 2600, maybe even 25.75. If we look at the bigger picture and zoom out a little bit on the weekly chart, I would keep an eye on where this week is ending. As you can see here, also it's of course it's a bearish candle, but if it also closes below the opening of last week, then we are in really big trouble, and that would be a massive top and reversal candle. It would be a bearish engulfing. But let's see when we cross that bridge. And I mean, currently there's not much to worry. As you can see, very high readings on the RSI, up to 80, almost down here. You can see in the bottom right corner. Let me move this one. So not really a divergence here. It has been traded out. So let's draw some trend lines. I think we should do that. You see, tops are following nicely. So we could see higher highs towards the end of the year, maybe going into the next year. That's also basically my point. I think we will see a correction here short term, and then it will pick up again. And it's going to be interesting to see if we will get a Santa Claus or New Year's rally, or if it will just be fizzle out and be a little bit flat. And not easy to say at the moment. If we zoom out even more on the S&P 500, and now we are actually going all the way back to, let's get a little bit more history on here, so we have an idea what's going on. So as you can see, RSI very high numbers. We haven't seen this high since, well, actually not since the financial crisis kicked in. So where are we? Let's draw some trend lines or some horizontal lines. See, RSI is higher than it was just prior to the financial crisis bearish market. It is higher than any time ever since. It's the highest we have seen in almost decades. You can see we have a reading here of 83.48. That is really, really high. We probably have to go all the way back to, yes, we have to go back to the golden days in the 90s on the during the dot-com bubble. So we are in some extreme markets. Not to say that it can't continue a little bit more, but as you can see, it is a massive move, and it's the longest streak of positive months that we have seen in history, and it is the longest streak of days without a 3% correction any day. So new records all the time. Question is, how long can it go on? Let's move to Nasdaq, and I can take Nasdaq 100, I can take composite, it doesn't really matter. Let's move into the Nasdaq 100. Quite interesting. Let's zoom in a little bit here on the daily chart. As you can see, what we have here, we got a doji. So this is actually a doji evening pattern. We got a little bit of what looks like a hammer. Hammers are not interesting themselves, but this massive bearish candle afterwards that followed here, that is really a bearish sign. So we have a top and a top and reversal formation here, and it was followed through 2 days ago also, where they tried to lift the market but it couldn't sustain. And yesterday again, it started started low, they traded all the way up, and it collapsed at the end. And currently it looks like we are gonna start on the low end this morning. As you can see, divergence in the market. You see RSI tops here has been falling, whereas the market went up. That is divergence. That is an imbalance in the market. The strength of the recent tops are not as strong, and we need a correction. The interesting thing is how low can we drop? Well, I think we should drop somewhere between 6150 and 6200, something around here. And this is what is interesting actually. Look out for this gap it made back there. Let's draw another one. And this one. And I'll do another one just to give you an idea what I'm talking about. Okay, there's a gap here. If market closes this gap, then this support area around 6,000 will be in danger. If that is being taken out, well, then we certainly have turned to a bearish market, no question about that. But let's see the coming days what's happening. Let's zoom out. Again, let me just remove all these lines. So very strong rise in Nasdaq here. That was the financial crisis here back in 08, 09. Doesn't look at much. This was the dot-com bubble in the 90s. If there's any of you guys remember that, I was trading in London at back that time. Remember that. So this is interesting. We have some of the highest readings on or values on the RSI, and we haven't seen this almost since dot-com bubble. So are we in a bubble? Well, there are certainly signs of that, but again, I'm not saying it's going to burst anytime soon, but there are definitely a little bit of a warning sign. What is also interesting, if I remove these again, we do have some divergence here. Oops, just didn't draw it correctly. Right, you can see the tops or the peaks here on our side, they are falling. This one is lower than this one, but we saw higher peaks on the actual price graph, and that is a warning sign. There is imbalance in the market. The moves are not that strong. So we will look out for top formations in the market and see if it gives us anything. Currently, there is no top formation, but let's see if we will get any the coming weeks or coming months. Let's move to DAX, which is a bit different than the American indices. Here we are on a daily chart, and that has actually been very interesting. Back here in in late November, early December, we saw a couple of dojis in decisive market, and then you got this massive bearish candle here. That was actually a bearish engulfing, taking out these three peaks here. It was followed through, closed the gap, very bearish also, went down to test these 12,900 a couple of times, bounced back, but couldn't really get back up to this line here. So now I would say this line is out of question anymore. We don't need that. Closed down for the first time late last week. It closed down below this support area here. So technically we are now in a downtrend on DAX. Oops, sorry. So what should we look out for? Well, what thing we should look out for? There is a little bit of support here around 12,800, 850. It's not that strong, but look at the Bollinger Bands. They're really narrowing at the moment, and I think we could see a narrowing maybe another day or two. But to me, it seems like we are on the downside here on DAX. DAX looks weak. If we should just take the big picture here on DAX also, zooming out a little bit, also going back. So interesting also to see massive divergence. See the tops here, they are actually dropping. So what should I look out for? What we actually can do, and this is, I think it's a very good example, you can actually draw trend lines and formations on RSI, just like you can on the underlying instrument, the price graph. So here we actually have kind of an symmetrical triangle, and it is doomed to break out within the next couple of days. And my bet will be on the downside, but again, it's not an advice for you to go short or anything. It's just that's my bet on it. Very steep trend line, a break of that, and then yeah, well, we could be in a bit of a trouble also here. Seems like we're trading this very narrow rising channel. So let's see if we get a breakout from there in the next couple of days. Not the strongest, well, it's not the strongest sell signal, but still that top candle coupled with or combined with massive divergence on RSI, that is not good. That is a warning sign that we could see lower levels here in the on the DAX. On the little bit longer term, then of course 11,900, that level, if we break below here, have a close below there as well, then also then we will also have downtrend confirmed on the bigger picture. But let's see, there's still some room down there, and it's not going to happen anytime soon. It's just worth to keep eye out on these levels. Let's have a look at Nikkei, which has actually been very strong this year. But it also seems like it looks like it has topped out. Also here you have divergence. And we don't like divergence if we are bullish people, if we want to go, go long, or if we are long in general. So as you can see, you have divergence. This one is gone. These tops are going up. These tops are dropping. This is the monthly chart, of course. So let's see. It is maybe building up a big bearish candle here, and bearish engulfing even. Let's zoom in a little bit and see what's going on. Not much comfort, really. Had this massive candle here, as you can see, massive doji with a sell-off. It was a top, and then you had a bearish engulfing here over here. You see it took out the previous candle, the body of the previous candle. It didn't take much, and it's been selling through here. So let's draw some trend lines here. Also, we had a break of this trend line, and now you will look out for a close below here. I think we will test that low, 21,820 something. I think you will we will test that fairly soon. Yeah, there's Alan here. Seems to me equities market have been hanging around the overbought levels all year, but they just break higher, and it's true. And the thing is about being overbought and oversold and divergence and imbalance. Imbalances can actually go on for quite some time. And just because something is overbought or oversold for that matter, if something is overbought, it can still go up. It's just a warning sign. What you then will look for, you get the first yellow light, so to speak, say, hang on, there's an imbalance here. Look out for a signal that is the top of reversal signal, and we haven't quite gotten that yet, but we got it on Nasdaq with a top and reversal pattern. So, but yes, it has been a divergence in the market for quite some time. Let's move on to what could maybe spell some trouble for equities markets, and that is interest rates. Interest rates. In this case, let's have a look at the US 10-year future. This is the US 10-year notes. So let me zoom out a little bit. This is the a daily chart, and it has been testing this support quite a number of times, bouncing around 124. It was quite interesting here where it tested a couple of times, bounced off. It's actually a support that goes back to earlier this year. And it's been trading in this kind of, first it looked like maybe an inverted head shoulder, but it never really broke the neckline, so that was not a leg line, but it's definitely is a falling trend line in maybe a descending triangle, or it also looked like it was a symmetrical triangle. We can remove that one because it wasn't, but we are in a downtrend. 55 moving average is pointing down. 200 moving average is basically flat. 21 down. Seems like it's bouncing a little bit. So there are some interests, buyer interest here around 124, and that is the area you would look out for. Will it drop further, or will it bounce back up and test this falling trend line? If we zoom out a little bit, let's have a look at daily charts to get a little bit of a bigger picture here. Had this massive candle, bearish candle, so you can see it tested here. If it actually breaks and closes below the 124.6, well, then we are talking about 122.20, 123 level. We are not quite there yet. As you can see also that RSI is still positive. It has not broken below 40, so it's still, sentiment is still bullish, but I would say it is massively under pressure. It's really, buyers are really fighting here. So that is what you should look out for. Will we get a close below this, and especially a weekly close, or will it actually bounce back? And keep an eye on this falling trend line. Right. Since we are with commodities, let's look at a few of the commodities, and then we can round off with some of the major FX pairs. Question about FTSE. You blinked. No, sorry, you didn't. I can have a look very quickly. I will look at our future here. Very flat, actually. Past couple of months, to say the least. I would draw a little bit of a trend line here, and then I will maybe draw something here. So it seems like it's a sideways moving, maybe kind of in a triangle-like thing, triangle-like pattern. This is a weekly chart, remember that. So it's the bigger picture we're looking at. So that's, I mean, a little bit boring on the bigger picture, actually. I would need a confirmation on break below here, which is just below 7,200, or a break above here, which is just below the 7,589. So which way is going to go? It doesn't really give me anything, to be honest. It doesn't really give me anything. I mean, it was a bearish candle here, it was a bearish engulfing here. But I need something, either a bounce from here or a break below before I would say take any directions. So if we zoom in a little bit, seems like it's bouncing maybe up to around 7,400, 7,450. So this seems to be. I mean, we are in a bear trend. You know, you have lower lows, lower highs, lower lows. So maybe a little bounce up, and before it will test these support areas here. RSI on the daily chart, bearish, no divergence, so we could see a lower low down to this support around 7,200 within the next couple of weeks. That's definitely not impossible. Okay, let's move on to some of the commodities, if you're interested in that. I am skipping Dow Jones because I actually had a look earlier today. If there's time at the end, I will talk about it, but it basically looks like S&P 500. Of course, the levels are different, but the formation are pretty much the same. Right. Anyone interested in crude oil? Otherwise, then I will skip that, but very quickly, let me do it. It seems like it's drawing this kind of rising wedge formation, breaking out today, and people has been warned. We had a divergence here on the RSI on the tops, broke out a little bit sooner than normal. Usually in a wedge it breaks out around 2/3 of the way to the apex. The apex is where the two lines meet. So a rising wedge, and I believe we could see crude oil drop down to around the 55 is support level within the next couple of days, about a week or so. Bigger picture. Let's have a look. Where are we in the bigger picture? Got rejected here, just around the 200 simple moving average on the weekly. There was no divergence, saying, well, technically we could move higher, but I think the resistance just below $60 is quite strong. What about Brent? Is that acting differently? And it has been acting differently a little bit, actually. Let's find the continuous. There we are. So here on the weekly chart, top formation. Doji last week, a sell-off now. So you actually got kind of a little bit weird, but still, you got a little bit of a doji evening signal here. You had some divergence, as you can see, the tops here are dropping. If we move into the daily chart, zoom in a little bit, it actually broke this rising short-term trend line here a little bit earlier than the crude oil. Support around 61. Look out for that. I think it will be tested within the next couple of days. If it takes it out, well, then there's not really any strong support until around 56, 57 areas down here, 55, maybe even 54. 55 similar average will offer a little bit, but not much. Okay, let's have a look at gold. Let's take the gold future. A little bit weakness in gold lately, as you can see. But hovering around support areas around 1260, just above 1260. Look out for that. Got to close below here. Well, then seems like it's really slipping. And let's draw another trend line. Maybe it's a little bit of a descending triangle we have going on there. So it's a bit weak. So this is the level I will look out for. Let's have a look at silver. The silver future. And here we are. And let's remove some of the trend lines. It's been actually weaker than gold. Testing support from back here in over the summer. Not very strong support, I must say. It's just where it jumped around a little bit. Bollinger Bands, as you can see, we haven't spoken much about them, but they are measure volatility. Bollinger Bands are still expanding, as you can see, and we are still in the initial phase. We could see silver dropping further. RSI below 40. That means we are in a bearish sentiment, but there's no divergence. It doesn't have to be a divergence for the market to turn around, but there is no divergence. So there's nothing at the moment that say, okay, silver will turn around. Of course, you can get some, you can get a bounce, but I wouldn't bet on it at the moment. It would be a short-lived one. I could easily see silver drop to below 1600. Maybe there's some interest around 1600 just because it's around now. But 1550 rest of the year is not out of the question. To be honest, everything is pointing to lower levels. Same on the weekly chart. So silver doesn't seem to be a commodity where people want to be in. And let's round off with copper. Seems like everyone was jumping into copper. Maybe it has topped out now. Couple of days of weakness, and as you can see here, also some divergence. Maybe that is what's kicking in at the moment. Yes, what's kicking in, higher highs. So it seems like it's dropping and breaking this trend line. So the next support just around 290. Keep an eye out for that. Close below here, well, then we are back down to easily back down to around 260 again. The bigger picture That was the bigger picture. Now we have the daily, more or less the same. Been dropping a little bit here lately, trying to recover, got hammered down. I think we will test this 289 to 290 within a few days. Within a few days. All right. Let's move on to some of the FX pairs. And let's start with one of the small ones that might interest some of you. And I think we should start with the bigger picture here in euro dollar. And if you have been following my webinars and my some of my articles on tradingfloor.com, you can see I've been writing a lot about euro dollar, of course. Just to recap, zooming out, seems like euro dollar has been trading in this massive or very wide falling trend channel here. So this is the one I'm talking about. Here's the other one. So got some support just above par when everyone was talking about, oh, it's going to drop below par, and of course it didn't. Got the triple bottom-like formation, and you had the kind of neckline here on the triple bottom, building up a new trend. And what was interesting to see is that you can see massive divergence. See, market was falling slightly, massive divergence on the RSI. Excuse me. And what has it done? Well, it formed what looks like a 1, 2, 3, and then a very short 4, surprisingly short 4 maybe. I actually, and honestly, I did predict we should test this falling trend line here, or this triple bottom confirmation line, down to around 114. We didn't quite get there before it starts picking up, but maybe we'll. Maybe it's just A, B, C down to 114 the coming months. It's not easy to say. Nevertheless, regardless of what it's doing it now or later, and I still think we will get up there sometime next year and test this falling long-term falling trend line around 120, 122 in that neighborhood somewhere in 2018. So if we zoom in a little bit, will we get a little bit smaller here? So you can see 1, 2. This one should be right there. 1, 2, 3, 4. Oops, sorry. 4, and I would actually have liked to see A, B, C, and then 5 up. But let's see. It's not. If it takes out the top of the 3 here, well, then the 4 is over. A little bit unusual. They're usually more complicated when 2 is fairly simple. This is a fairly simple 2 move. Then the 3 is usually more complicated. But maybe this is A, B, C instead, and not A, B, C. But it could be A, B, C, and then 5 up. So that would be 1, 2, 3, 4, 5. So let's see. I still believe whether we will talk about 122, 23, 4, 5 sticker next year. So let's zoom in on the daily chart. It's been a little bit dull lately, to be honest, a little bit boring. Oops, should not move that one. Has been a little bit boring. So can we actually get something out of here? Let's try to draw some trend line. And this is what you do when you work with charts. You work with trend lines, saying, okay, is there a trend line building up here? Do we have a pattern maybe? Is it a rising channel that it's breaking out of? Okay, where is there some support levels? Well, we have some support levels around here, 117. You don't want to see it break below here because then suddenly we are talking about 114 again. So these are the levels you should look out for. And then of course, if it breaks above these high peaks here, here and here, yeah, well then we are back in business on the upside. So a little bit indecisive at the moment. You don't get much from the RSI. RSI is not pointing well, it's not saying that there's a divergence, so we could turn around and move up, but a little bit tricky on short term, to be honest. Not really giving any direction. Let's have a look at cable. Especially when we are talking Brexit, it is of course interesting. Broke out at this, as you can see here, looks like a descending triangle. Had some resistance at 133.40 level, massive support around the 130, just above 130, broke out, and interesting to see that it actually paused at a Fibonacci level, not the one I have here. Well, it actually also did that, but this one, very close to, gonna drop back. If you were listening in on the one of our global morning calls every morning at 8:40 CET, I was the weekly guest yesterday, which that I'm always there on Tuesday morning. I discussed cable, that it could drop back a little bit here the next couple of days, testing this support level around 133 and a half, 133.40 before I believe it'll move back up again. There is no divergence on the RSI. We could see higher highs in the short-term future, but let's see what happens here. I think we will test this support here just above 133, definitely. Maybe a little peak lower before picking up again. Euro sterling, last time I looked at it was really boring actually. Just moving sideways, still does. In the beginning it also looked like it was a descending triangle, but not really. So what we have an FX pair, euro against sterling, trading between 87.5 and 90.20-ish level. And that is where we are. Oops, there is not really any direction. There's no clues, there's nothing. So seems like it's bouncing here, so maybe we'll try to pick up again towards the .90 next couple of days. We have some dojis, as you see, and a possible bullish candle today. So a higher levels the coming days towards 90, and then let's see if it can actually break above, or it will turn back down again. It's not really much to give, and that is how it is sometimes. And market actually, I mean, 70% of the time or more, it's just trading sideways and doing nothing, and then suddenly it moves, and then you should be ready to look out for breakout levels. Let's have a few more. Dollar Canada. Bigger picture. Bounced about half of the drop that it did earlier this year, over the summer. So where are we now? That's where we are now actually. Just below around 129. There seems to be very strong resistance, and it seems like we could drop a little bit further here in a correction. But what's actually interesting to see, there was no divergence, as you see. See, lower lows on the RSI, lower lows on here. So will it turn around and make a new low? That's too soon to tell. So let's move in. Also, very low activity going on. It's maybe we should see it taking out this not so strong support, and it actually see now it's working on it. have some support here around the 126.5. A close below, well, yeah, then maybe we are down to around this level, which is around 124.5, 125. Definitely this was a bearish. So dollar Canada looks weak. Right, now I've been talking about 45 minutes, and I will just look at one more interesting, maybe. I haven't looked at it in a while, but maybe I should. Not what's really going on here on the. Is there any last requests that I should look at before I call it quits today? Non-farm. Oh, this trading system. Yes, this is actually our new Saxo Trader platform, and the chart is actually from our Saxo Trader Pro. Let me just demonstrate a little bit. It's not being released yet. This is the chart, what it looks like, but it's not being released to clients yet, but you will soon get it. And let me show you what's going on. So here, that is a workspace I have set up. I have some stocks over here. I have some ETFs here. I can have several. Watch lists. I can do my own. I can do some of the ones that are predefined. I can several windows. This is our new Saxo Trader Pro platform that we are working on, and official launch is planned to March next year. And that is eventually going to take over Saxo Trader 2 that I believe quite a few of you are using. If you're not using that, you're probably using another platform, and let me show that one to you, called Saxo Trader Go. The chart is the same, totally identical. And let me just give you a little bit of look here also. And you can get it in two different colors. Get it in black and in white, as you can see here. Same chart as the one I just showed you. Also on Saxo Trader Go, we have here under news and research, we have trade signals that will do some of the detection for you to, give you some ideas about different signals in the market. If we, for example, take, let's see if there's anything in the CFD indices. We can take Nasdaq. Yeah, it actually showed the rising wedge that I also showed you on the chart earlier in this session. It actually detected, and this is done automatically. There's no human behind this. It's purely an algorithm that tried to detect patterns in the market, like wedges, triangles, shoulder, head, shoulders, and so on. Support and resistance levels. It's free for all users. It will not be released into Saxo Trader 2. It will only be in Saxo Trader Go and also Saxo Trader Pro. So, and you can move around. It's a live chart, actually. There are some kind of suggested take profit and stop loss that you can put in there and say, oh, yeah, interesting, I want to do this, and then you want to trade it, for example. We have 55 currency pairs on time horizons or time periods or intervals from 15 minutes, 30 minutes, 60 minutes, 4 hours, and daily. We have stocks and CFD stocks on daily charts, and we have CFD indices also on 15 minutes and so on. And it's free for all users. You will find it in here, but you also find it in other places on the platform. You can search for emerging patterns, like if we take ABB, for example, you can see it's emerging pattern. It's still trading in an up channel. so it's not broken out. And if it has broken out, for example, this one broken out of triangle a couple of days ago, about 4 or 5 days ago, then you will also get a signal. You will also soon be able to get notifications when it happens, so you don't miss any signals. But you can see here there are many signals every single day, and it's free for all users. Anyway, one last request, and that's going to be the last for today. This is Saxo Trader Go. You can see I'm totally on a totally new platform. Dollar yen. Okay, since it's one of the big ones, I'll do it, but that's going to be the last one. So where are we? And now it's black. I hope you can adjust to it. Looks bearish. Looks like it is what is 1, 2, 3, 4, 5 maybe. RSI is bearish. Market is moving around, so it seems like it will drop and test these 111 again. For the bearish picture to be demolished, you need a break above 113. Okay, thank you very much for attending, and I'll see you again or talk to you again next year. This is the last one I have this year, so I'll see you all in 2000. Thank you very much for joining. This webinar has been recorded and will be uploaded to our website. Thank you.